At 9:59 a.m. on October 29, 1929, the trading floor of the New York Stock Exchange went silent. 1,100 men held their breath. One bell was about to change everything. In the next 6 hours, America would lose more money than it spent fighting all of World War I. $14 billion. Gone by sunset. By the time the closing bell rang, the despair would be measured in lives, not just dollars. And the American dream would be rewritten. This is not a story about numbers. This is the story of the longest day in financial history, hour by hour. Like Finney says, the market crashed in a day. The consequences lasted a decade. That's compound interest working in reverse. Welcome to Finney Chronicles, where history meets money, power meets consequence, and every story is a warning somebody ignored. Let's start the night before, October 28, 1929. The market has just suffered its worst single-day point drop ever. The Dow fell 38 points, nearly 13%. Brokers stumble out of the New York Stock Exchange having processed more trades in one day than most weeks. But here's what nobody knows. Tonight, the margin calls are going out. By 1929, you could buy stocks with just 10% down. Put up $100, control $1,000. When prices rise, you're a genius. When prices fall, deposit more money by morning or we sell everything. All across America, phones are ringing. The problem? Nobody has more money. Everything is already in the market. Like Finney says, the 1920s invented YOLO investing. The 1930s invented paying for it. It's 2 a.m. on October 29th. Phones are ringing across America. Margin calls. By morning, everything changes. If you want to see how this day unfolds hour by hour, keep watching. And if you want more stories like this, subscribe. We're building the complete timeline of financial crashes. Okay, back to October 29th. 5 a.m. In brokerage offices across Manhattan, the lights never went off. Ashtrays overflowed, coffee went cold. The air tasted like smoke and dread. At J.P. Morgan & Company, Thomas Lamont reviews overnight cables. European markets have opened. They're selling too. By 7 a.m., the subway stations fill with men in gray suits. They've seen the headlines. Some look determined, some look sick. James checks his pocket watch. 8 months ago, he was a high school teacher in Brooklyn. His father-in-law called him crazy for quitting. This morning, he wonders if the old man was right. His wife is 6 months pregnant. He told her everything would be fine. By 7:30, crowds are gathering outside the exchange. Not traders, regular people. Shoe shiners who bought RCA, waiters who bought General Motors. In 1929, an estimated 1 million Americans owned stocks on margin. Today, they're all watching. Like Finney says, when your taxi driver gives you stock tips, you're not early. You're the exit liquidity. 9 a.m. The most powerful bankers in America are arriving at 23 Wall Street. Thomas Lamont of J.P. Morgan, Charles Mitchell of National City Bank, Albert Wiggin of Chase. These men control more wealth than most countries. They're running the same playbook that saved the market in 1907. Pool resources, buy stocks, restore confidence. But 1929 isn't 1907. In 1907, the Dow dropped 8% in a week. In just 2 days, the Dow has already dropped 23%, and today hasn't even started. Richard Whitney, vice president of the exchange, enters. On Thursday, he strode onto the floor and placed a massive buy order. The market rallied. He was hailed as a hero. Today, he looks less certain. Like Finney says, Thursday's heroes become Tuesday's cautionary tales. Markets have short memories for saviors. The bankers debate. Buy more, support prices, but even their combined wealth has limits. You can't stop an avalanche with a shovel. 9:30 a.m. The trading floor is a cathedral of capitalism, the size of a football field. 18 trading posts. 1,100 floor traders take their positions. They handled 16 million shares yesterday, an all-time record. They don't know today will shatter that by noon. 9:59 a.m. The floor goes quiet. Like Finney says, the quiet before a crash isn't peace. It's the market holding its breath before it screams.
10 a.m. The gong strikes, and hell breaks loose. Within seconds, the sell orders flood in. Not hundreds, not thousands, tens of thousands. A floor trader receives his first order. Sell 20,000 shares of U.S. steel. At market. At market. Whatever price, just sell. The opening price is gap down. Stocks that closed at $50 open at $40. Stocks that closed at $100 opened at $75, and they keep falling. By 10:05, the ticker is 3 minutes behind reality. By 10:15, 10 minutes. Traders are making decisions about a market that no longer exists. Like Finney says, when the ticker can't keep up, you're not watching the market, you're watching the ghost of the market. James is working post 4. He handles railroad stocks. His own portfolio, everything he has, is in railroads.
all on margin. He watches Pennsylvania Railroad drop from $82 to $71. He does the math. He's already wiped out, but he can't leave. He has to keep processing orders, selling other people's dreams while his own burns. 11 a.m. The floor is a sea of paper. Order slips carpet the ground ankle deep. Men have torn off their jackets. Sweat pours. 1,000 voices screaming at once. Every phone line is jammed. A telephone operator is crying while she works. She's heard 12 men's voices break in the last hour. She keeps connecting calls anyway. What else can she do? Like Finney says, the numbers on a ticker are just numbers until you remember every one represents someone's life savings. In the visitors' gallery above the floor, a British politician is watching. Winston Churchill. He came to see American prosperity firsthand. Instead, he's watching it collapse. He'll later write, "I saw fortunes made and unmade in minutes." He doesn't mention that he was also invested. Churchill lost money that day too.
Noon. 8 million shares traded, and the day is only half over. At 23 Wall Street, the bankers reconvene. Their buying pool from Thursday, underwater. The stocks they bought to support the market, worth less than they paid. Thomas Lamont steps outside to address reporters. His statement, "There has been a little distress selling." A little distress selling? The Titanic had a little water damage. Like Finney says, calling Black Tuesday a little distress selling is like calling a hurricane some wind. Outside the exchange, the crowd has grown to thousands. But it's not a riot, it's a vigil. An old man holds his hat in both hands. He hasn't moved in an hour. He's watching his retirement disappear. 1 p.m. Traders are collapsing. Medical staff move through the floor with smelling salts. One trader is carried out on a stretcher. Heart attack. He's 34 years old. The ticker is now 90 minutes behind. The prices on the board are ghosts of an hour ago. No one knows where anything actually stands. James is still at post 4. He's processed over 500 sell orders. His own stocks are worthless now. He owes his broker $8,000 he doesn't have, but he keeps working. What else can he do? Like Finney says, the market doesn't pause for broken hearts. It just adds them to the ticker. 3 p.m., 1 hour until close. The selling hasn't stopped. Every attempt at a rally is crushed within minutes. Some stocks have stopped trading entirely. There are no buyers at any price. 3:50 p.m. Everyone who hasn't sold makes one last desperate attempt. Prices in free fall. 3:59 p.m. Traders are counting down, praying for the bell. 10, 9, 8. The gong strikes. 4 p.m. It's over. For a long moment, no one moves. Then, men simply sit on the floor against posts, too exhausted to stand, too stunned to leave. Some are crying, quietly, not ashamed to. The damage? 16,410,030 shares traded, a record that would stand for decades. The Dow down 12%, combined with Monday down 25% in 2 days. Over $10 billion in stock value. Gone. The entire federal budget for 1929 was $3 billion. Like Finney says, October 29th didn't end when the bell rang. That's when the real damage started. James leaves the floor at 5 p.m. He walks past Trinity Church, past the gravestones of Alexander Hamilton and other founders. He's thinking about what he'll tell his wife. But he lost everything. The apartment they were going to buy, the savings for the baby, the future. But he'll be back tomorrow. But everything is different now. By midnight, the headlines were printing across America. In Chicago, a man burns his stock certificates in his fireplace. In Boston, a shop owner realizes he's lost his store. The Great Depression was beginning. We got the SEC, the FDIC, circuit breakers, all because of this day. The technology changed, the psychology didn't. In 1929, shoe shiners gave stock tips. In 2021, we had the same thing. Different assets, same pattern. When everyone's already in, who's left to buy? Like Finney says, we didn't get financial regulations because bankers wanted them. We got them because October 29th, 1929 made them unavoidable. Today, you can check your portfolio in seconds. In 1929, people waited hours to find out if they were ruined. Different technology, same fear, same greed, same human beings. James, he stayed in the industry, worked his way back, paid off his debts over years. His daughter, born March 1930, heard the story every October 29th until he died in 1987. She told it to her grandchildren.
One of them works on Wall Street today. He still calls her every October 29th because the date matters. October 29th, 1929, the day the music stopped, the day the bill came due. What goes up by speculation must come down by mathematics. 16 million shares, $10 billion lost, 6 hours, one day that changed everything. Like Finney says, Black Tuesday wasn't the end of prosperity, it was the invoice. And like all invoices, ignoring it just added penalties. One day, hour by hour, the crash that ended the Roaring '20s and started the Great Depression. If this changed how you see market crashes, hit subscribe. We drop videos like this every few days. Real stories about the moments that shaped financial history. James watched his future disappear on October 29th, but he stayed. He rebuilt. Drop a comment. What would you have done? Sold it open, held through, or walked away entirely? Next time, the 2000 crash, when the internet went to zero. Coming soon.